Now we are going to start debentures. Before I start this chapter, I'm assuming that you have already learnt about issue of shares and you know well about the accounting treatment of the shares. You know, whenever we start the business, we need some loan. Sometimes, I'm to say, suppose I want to start some business and I have got only 100,000 rupees in my pocket. But my project needs 2 lakh rupees. What it means? I shouldn't start this business? No. 1 lakh I've got with myself, that will be my capital, and 1 lakh I can borrow from any other source. That may be my friend, that may be my bank, etc., etc. So in this way, I'll be able to collect 2 lakh rupees and I can start my business. When I have earned sufficient money, I will repay my loan, as well as I will have to pay interest on the loan because I am using someone's money. So generally in every business, every businessman needs loan for the project. So in the same way, suppose on one way company issues shares and the money collected from the shares, that is the share capital, they are the real owners. But if the company is looking for some loan, the company has got so many options. Company can go to the bank and take loan, and another option is the company can go to the public for loan. If the company is going in this direction, it means company will be issuing debentures. Let me explain the whole thing. Suppose company is looking for 1 lakh rupees as loan, and instead of going to bank, company decides that it should get 10,000 people who can contribute rupees 10 each. In this way, company can collect 1 lakh rupees, and after some time the company will repay the money. It means company issuing debentures, means taking loan from the public. So now the question is, what is debenture? Basically debenture, when I get 10 rupees, suppose I am running a company and I get 10 rupees from you, naturally I will have to issue you something, some receipt or some acknowledgement or some proof that I have taken loan and I'll pay you after some time. That certificate or that instrument is called debentures. And the accounting treatment of the debenture is almost the same. If the company decides to issue debentures to the public, it's almost the same procedure as the shares are issued by the company. Means the company will have to prepare a prospectus and get approval from the registrar of companies and write down all the terms and conditions regarding issue of the debentures. I mean to say, how much company needs now, at what time the company will repay the money to the public, how much interest will be paid, and at what time interest will be paid, whether it's quarterly, half yearly or yearly, etc., etc. And these debentures are being paid at par, discount, premium. So all the conditions and terms are written down in the prospectus. And naturally this money of loan, I mean to say this money of debentures, can be collected only through bank. And you know well that bank is called issue manager. Suppose company issues 10,000 10% debentures of rupees 10 each. And the money is called in 3 installments, 3 plus 5 plus 2. And these debentures are issued at par, I mean to say rupees 10. So naturally in this question, there are 3 installments. And 2 journal entries are passed for each and every installment. So in this question, we'll pass 6 journal entries. 1 journal entry for receipt and another journal entry for transfer for every installment. Now, journal entries for first installment. You know, first installment is called debenture application. So first of all, at the time of application, first of all, receipt entry is passed and then transfer. And after that, I mean to say for allotment, first call, second call, third call, first transfer entry will be passed and then receipt entry will be passed. So journal entries for debenture application. Bank account debit to debenture application and debenture application to 10% debentures account. Be careful. Whenever you credit debentures account, you must mention the rate of interest. 10% debentures means on these debentures, 10% interest will be paid for 1 year. So the amount will be 10,000 into 3, 30,000 rupees. Now the journal entry is for allotment. Allotment is 4 rupees 5. First of all, we'll pass transfer entry. That will be debenture allotment, account debit to 10% debenture account. Bank account debit to 10% debenture allotment account. And the amount will be 10,000 into 5, 50,000 rupees. Now journal entries for first and final call account. Debenture first and final call account debit to 10% debentures account and bank account debit to 10% debenture first and final call account. And the amount will be 10,000 into 20,000 rupees. Let's take another question. Like issue of shares, the debentures can also be issued at premium. Suppose company issues 10,000, 10% debentures of rupees 10 each, and this money is called in 3 installments, 3 plus 5 plus 3. And these debentures are issued at premium of rupee 1, I mean to say rupees 11. And this 1 rupee premium is included in the allotment. So now, what will be the journal entries? Naturally, there are 3 installments, so 6 journal entries will be passed. And secondly, this is the question of premium. So debenture premium account will be credited at the time of transfer entry, and it should be credited at the time of allotment, because it's clearly stated in this question that premium is included in the allotment. Be careful, debenture premium is always credited at the time of transfer entry. So the journal entries. I am assuming here that you have already learned the treatment of premium at the time of issue of shares. So I am going to pass journal entries only for allotment. You know, at the time of transfer entry, we pass journal entries debenture allotment account debit to 10% debentures account. And because these debentures have been issued at premium, so debenture premium or security premium account will be credited at this time. So the journal entry will be to debenture premium account, and the amounts will be, amount due was 10,000 into 5, 50,000 rupees, to debentures account 10,000 into 4, 40,000 rupees, and to debenture premium 10,000 into 1, 10,000 rupees. And the entry for receipt will be bank account debit to debenture allotment account, that is 10,000 into 5, 50,000 rupees. Debentures can also be issued at discount, like shares. Suppose company issues 10,000, 8% debentures of rupees 10 each, and these debentures are issued at discount of rupees 1. I am to say these are being issued at rupees 9, and the money will be called in 3 installments, 3 plus 3 plus 3. So like issue of shares, debenture discount account will be debited, and it is always debited at the time of allotment and transfer entry. Be careful. This discount is a loss for the company. No doubt it's a gain for the debenture holders. So the journal entries will be, I'm going to pass journal entries only for allotment. So the journal entry will be debenture allotment account debit to 8% debentures account. Because these debentures have been issued at discount, so debenture discount account will be debited. And the amounts will be 10,000 into 1, 10,000 rupees, 10,000 into 3, 30,000, 10,000 into 4, 40,000. Now the journal entry for receipt. Bank account debit to debenture allotment, and the amount will be 10,000 into 3, 30,000 rupees. Be careful. This debenture discount is a loss for the company, and all accumulated losses are shown in the balance sheet on asset side under the head of miscellaneous expenditure.